Welcome to PyUncut, where we break down the biggest investing ideas into simple, powerful insights you can actually use. Today's topic is something every investor asks at some point. If you had just $1,000 to invest right now, what is the ultimate growth stock you should buy? Let's start with the big picture. Over the past decade, the stock market has been driven by a few massive technological shifts. First came cloud computing, then smartphones, then e-commerce, and now we are in the middle of something even bigger: artificial intelligence. This is not just another tech trend. This is a foundational shift that is changing how industries operate, how businesses scale, and how economies grow. And at the center of this transformation is one company that has become almost impossible to ignore: Nvidia. Now, before we go deeper, let's understand what makes a growth stock truly powerful. A great growth stock is not just a company growing fast today. It is a company positioned to dominate a massive future market. It has strong revenue growth, expanding margins, and a clear competitive advantage that others struggle to replicate. Nvidia fits this description almost perfectly. Originally known for gaming graphics cards, Nvidia has reinvented itself into the backbone of the AI revolution. Its chips are not just powerful, they are essential. Whether it is training large language models, running data centers, or enabling autonomous systems, Nvidia's hardware is at the core. What makes this even more interesting is the scale of demand. AI is not limited to tech companies anymore. Banks are using it. Healthcare systems are adopting it. Governments are investing heavily in it. This creates a global demand wave that is still in its early stages. Now think about this. Every time a company wants to build an AI model or deploy AI services, they need computing power. That computing power is powered by GPUs, and Nvidia controls a dominant share of that market. This is why Nvidia's revenue growth has been explosive. In recent years, we have seen triple-digit growth in certain segments. That is extremely rare for a company of this size. Typically, once companies reach trillion-dollar valuations, growth slows down. But Nvidia has defied that trend, at least for now. But here is where smart investors need to think deeper. Is it too late to invest? Has the opportunity already passed? The answer depends on how you view the future. If you believe AI is just getting started, then Nvidia is not just a short-term trade. It is a long-term infrastructure play. Similar to how companies like Amazon built the backbone of cloud computing, Nvidia is building the backbone of AI. However, there are risks, and ignoring them would be a mistake. First is valuation. Nvidia is not cheap. The market already expects strong growth. That means any slowdown, even a small one, can lead to sharp stock corrections. We have seen this happen before with high-growth tech stocks. Second is competition. While Nvidia currently dominates, companies like AMD, Intel, and even big tech players like Google and Amazon are investing heavily in their own AI chips. Over time, this could reduce Nvidia's pricing power. Third is cyclicality. The semiconductor industry has always been cyclical. Demand can surge, but it can also cool down quickly if spending slows or inventories build up. So how should a beginner think about this? If you have $1,000, the key is not to chase hype. It is to invest in long-term trends with strong fundamentals. Nvidia offers exposure to one of the biggest trends of our generation, but it should be part of a broader strategy. For example, instead of putting all your money at once, you could invest gradually. This approach, known as dollar-cost averaging, helps reduce the impact of market volatility. You also need to think about time horizon. Growth stocks like Nvidia can be volatile in the short term, but over a 5 to 10-year period, they have the potential to deliver significant returns if the underlying trend continues. Now let's zoom out and look at the broader market impact. The rise of AI is not just about one company. It is reshaping entire sectors. Cloud providers are expanding data centers. Software companies are integrating AI into their products. Even traditional industries are becoming more tech-driven. This creates a ripple effect across the economy. It increases productivity, reduces costs, and opens up new business models. For investors, this means multiple opportunities beyond just one stock. But Nvidia remains a central player because it benefits from all of these trends simultaneously. Whether AI adoption accelerates in healthcare, finance, or manufacturing, Nvidia's chips are likely to be part of the infrastructure. This is what makes it such a powerful growth story. Historically, the biggest winners in the stock market have been companies that sit at the center of major technological shifts. Think of Microsoft in the PC era, Amazon in the cloud era, Apple in the smartphone era. Nvidia has the potential to be one of those defining companies of the AI era. However, successful investing is not just about identifying great companies. It is about managing expectations and risks. High-growth stocks can deliver incredible returns, but they can also experience sharp drawdowns. So the key question is not just what to buy, but how to buy. If you are starting with $1,000, focus on building a habit of investing. Focus on understanding the business, not just the stock price. And, most importantly, focus on long-term thinking. Because in the end, wealth in the stock market is not built overnight. It is built over years of consistent, disciplined investing. Let's wrap this up. The ultimate growth stock right now is not just about numbers. It is about positioning. Nvidia is positioned at the center of one of the biggest technological revolutions we have ever seen. But with that opportunity comes risk. High expectations, increasing competition, and market volatility are all part of the journey. For beginners, the best approach is balanced optimism. Recognize the potential, but stay disciplined. Invest gradually. Think long-term. And always remember, the goal is not to find the perfect stock. It is to build a strong investment strategy. That's it for today's episode of PyUncut. If you found this breakdown helpful, stay tuned for more deep dives into the biggest trends shaping the future of investing.